Well, it's Nathan Davis here with Community Lending and also the More Than Mortgage podcast. I'm here with Frank Ehrhardt with John Wood Properties. Good to see you, Frank.
Good to see you, Nathan.
And Jamin Eastman with the Chapman Insurance Group. How you been?
Doing well. It's been a couple months, but it's good to see you again. Thank
Yeah.
you for inviting us.
Yeah, absolutely. I think it's been about 4 months since we last got
Probably
together.
about 4 months. I think it's been 6 or 7 months since the storm. So yeah, shortly after the storm, we got together to kind of talk about what was going on, and that'd be a great time to kind of circle back and see what's transpired over the last 6 or 7 months here.
Yeah, I mean, when we met last time, obviously we had a lot of uncertainty with the housing market, what was going to happen after the hurricane. Obviously, insurance, we really didn't know, what the availability was going to be like. So certainly, I'm hoping we can get a little bit more clarity on what direction is the housing market going, and what's really going on with insurance these days. So let's get started with the insurance, because that was really something I think, Frank, we've been talking about. What is really going on. I mean, Jamin, if I turn on the TV and I start seeing what's going on with insurance, my impression would be is that an individual can't get insurance right now, and even if they could, it's probably not affordable. So maybe you can bring some clarity to that situation right now.
So affordability is relative. We get people coming in from out of the state, and they've always been surprised by our insurance rates, and now even more so. The one change that I think that we've seen over the last 6 months, availability is still very limited in terms of the number of carriers wanting to write any kind of new business.
How many carriers have maybe disappeared? What percentage have disappeared?
Disappeared completely. There haven't been any for, the last one went insolvent March 29th, and it was a big one. 100,000 plus or minus policies that some of them were transferred over in kind of an acquisition. A company came in and acquired a book of business, so that made some individuals' lives easier, but the options that they didn't pick up were people with existing claims, existing damage, and it's a challenge. And honestly, it's going to continue to be a challenge for those people until the claims are resolved. But in terms of availability, we really haven't seen a lot of carriers start to open back up in response to market conditions stabilizing. For homes that are still working on damage from Ian, what we have seen is some of these companies that specialize in builder's risk or renovation type policies, they've gotten pickier. Because at this point, we're 6 months from a storm, and if a house has been sitting in a state of disrepair for 6 months, there's all kinds of concern about what, aside from the damage that was caused by the storm, what else is going on.
What mold issues have come up.
Exactly.
Sure, that makes sense.
Yeah.
So, on top of the homeowners insurance, issues, then you've got the flood insurance. I mean, a good portion of our area was already in a flood zone, and I think they redid some of the flood maps, and now you've got an even greater portion of Southwest Florida now in a flood zone. So what impacts are you seeing there?
Yeah, and the timing of those flood maps was unfortunate. I think FEMA had been working on redrawing those maps for a couple of years and had gone through a number of revisions and presentations. They just happened to roll out a month and a half after the worst flooded event that we've ever had in this part of the state. So if anyone thinks that government programs can respond that quickly, they're watching something else other than what I'm seeing. But what has happened aside from the maps were redrawn, which moved a fair number of people into higher risk flood zones, is how that has impacted Citizens. So Citizens Insurance, again, is an insurer that's set up by the state to be an insurer of last resort. In terms of premium, they're actually pretty competitive because their rates are artificially capped by legislative action. And in response to that, in response to the insurance crisis, they have started to grow their book of business, which is never their intention. They're not looking to write policies when there's good private market alternatives available. And as an agent, we got to go through this whole laundry list of things to make sure there's not another viable option for them before we write them with Citizens. Now, especially with very few carriers writing, unless it's newer construction, and prices in the private market have shot way up, and in a lot of cases, Citizens has become a great, in terms of price, option for a lot of people. So they've grown from, I want to say it was around 500,000 in 2020, 2021 to 1.1 million the end of last year, projected to hit 1.7 million. So you're going to have the state insuring 20% of all households in the. So the reason that they are so competitive in premium right now is because they cannot, again by legislative action, raise their rates more than 13%. So they are not an actuarially sound company. Now, no politician wants to be the one to tell 20% of households, I'm repealing that and we're going to be actuarially sound. It's political suicide. So what they've done is they, effective April 1st, so just 10 days ago now, they have started implementing requirements for homeowners that are right now in those special flood hazard areas to carry flood insurance. Even if you don't have a lender that's forcing you to, Citizens saying if you want to buy our policy, you have to carry flood insurance. And that's flood insurance on the dwelling and on your personal property.
Oh, wow.
So, if you're a lender, they only care about the dwelling.
Right.
But Citizens is saying you have to carry flood insurance on your personal property, which was a surprise to us. That even applies to condos. So if you're in a condo on the 10th story, you have to carry matching flood personal property limits on a flood insurance policy. And the net effect of this is, without raising their own rates within Citizens, the cost to the policyholder has gone up. So now private market is starting to be a little bit more, they're more in line with the total cost, out of pocket for the homeowner.
Now, let me ask a question. Can you still inherit a seller's insurance policy if it still has some time left on there? Are you still seeing that capability?
Sure, yeah. So you always have the ability to, to assign a flood policy. There's, when FEMA changed their program back in the end of 2021, they had stated, listen, we're going to cap the ramp up in a premium from an existing policy or a new policy that was grandfathered in using an existing policy. So, we've got a limited runway there. I don't know how long it will take for those, for those rates to net out to where they're supposed to be, 5-10 years. But absolutely, we still tell, if I'm working with a realtor or if a lender's involved and they're collecting documents, make collection of a seller's flood insurance policy. That's as important as an inspection right now.
And it's a huge savings too. So, for example, my new construction, I'm paying $3,600 a year, and so, and that's really what the new policy, kind of the base is. And so, then if you can pick up an existing policy, they're typically somewhere between $1,000 and $1,500 maybe. So, you're saving yourselves a significant amount of money if you can inherit that the existing policy that's in place.
Yeah, absolutely.
So that's the knowledge that the realtor has to have, and the knowledge that the insurance company that they're dealing with needs to have as well to educate that consumer, because they may be coming from another state and not recognize the importance of that.
One of the things that we've been telling people too, and I think we touched upon this last time, insurance has become such a big number too that people have to start getting insurance quotes really at the time that they go under contract, during that inspection period, because they may be very, very surprised unhappily as to what that insurance cost may be. And so, and in some cases, and you and I have talked about this may kick some buyers out of the ratio to be able to afford the loan. And so we really do encourage people to talk to Jamin as soon as they go under contract now.
Yeah.
So
and cost aside, the underwriting times, when the underwriting has got a lot stricter, and the response times from these companies have gotten a lot slower. It used to be you could get a same-day turnaround on a question, but 3 days, 5 business days, that's not uncommon now. So I always warn a client, I can give you a quote today, I can't promise you it's going to hold tomorrow when I hear back from the underwriter.
Yeah. Now, Frank, I know you have some questions too for Jamin as it related to condo policies.
yeah, so this is another situation that again Nathan and I had run into recently, where a condo typically had coverage, and they'd had the same coverage for 20 years, and then all of a sudden it appears that the carrier had changed their coverage from replacement value to actual cash value for the roof. And so And then talking with Nathan, that essentially makes that loan not writable under conventional terms, and
Right.
so they have to go to a special lender, hard money, to be able to accomplish that. I know we've talked about this too. Can you talk a little bit about, is that happening, and what can these associations do to try to mitigate that?
It is happening, and associations, they're not too dissimilar from a single-family homeowner. Right now, everyone is looking more closely at that balance between cost and coverage. So for an association, they're saying, hey, we've had a great policy and it's been reasonably priced for 10 years, no questions, pay your HOA fees, and that's it. Now they're looking at costs are spiking in the association, the commercial world, just the same as they are in the residential side. And so the question is, well, it's a two-part question. One, even if it is available, is it worth the cost? If I'm paying, $500 a month in HOA fees, and the cost to continue the current insurance policy or something equivalent is going to cost double my HOA fees, are my buyers do they want that?
Right.
Do they want that? The second thing is availability, and this applies more to higher risk or really large associations. But commercial insurance, especially on like a big tower, it's not a single policy that's covering the risk. Usually they cover it in tranches. So you'll have one carrier that's writing the first 10 million, another that's writing the second and third. So I was dealing with an association up north in Sarasota County on one of the barrier islands, and they're saying, the building's worth 80 million, but we're just going to insure the first 40 million. So there is a gap. It's a newer construction, but they just don't have the number of carriers wanting to write those additional stacks.
Right.
And so the question is, again, very similar. Is it available, even if I'm willing to pay for it? And second, okay, it is available, am I willing to pay the cost for it?
Right.
And those are tough things that associations and individuals are trying to answer.
And one of the things I found is that these smaller associations aren't, they're not that knowledgeable about the insurance process. It's typically you, me, not you, but somebody that got looped into being the president of the association, or got looped into being the treasurer. And
Short straw.
Yeah.
Well, I guess I get to be the president, yeah.
So, and in the couple situations I run into, the HOA wasn't aware that policy had changed, because again, they'd written for the same 20 years, they've written that check to the same company, and so all of a sudden, it's not the same policy that they had, and the agent may have told them that, but it may just have kind of gone by and not really thought about it.
Right.
So what's the impact of this? So
Yeah.
it's something that associations definitely need to be aware of. So
And those, while they're dealing with those costs, the same, flood questions. A lot of these associations that were not previously in flood zones are now have been redrawn into flood zones. So at the same time, they're saying, we've never had to carry flood insurance,
Right.
but do we push that off on the individual unit owners, or do we pick that up as an association? So
So we're going to see HOA fees continue to increase, no doubt, over the next 12 to 24 months as these things become a reality.
for sure.
I think the other thing too, as the renewals come up for associations too, because they come up obviously throughout the year. So the associations that had the renewals in January, February, you're seeing those rates go from $400 a month to $500 a month, and so I tell people to be careful that look at your association dues, because there is a good chance that if your insurance policy hasn't renewed yet, that number is going to go up, and your association dues are going to go up as well.
Yeah.
Well, that was some wonderful news, Jamin. Appreciate that on the insurance, but the reality
ray of
is,
sunshine on this great day.
yeah. I mean, but we need to know the reality of it, and I mean, we understand the challenges that are there, and hopefully we'll start to see some of this kind of level out a little bit as some of these homes get fixed up. And
Well, and the one bright spot is, aside from hurricanes and floods and those kinds of things, the litigation environment in Florida has always been the primary driver of volatility in the insurance market.
Mm-hmm.
And the state House and Senate passed a bill, which was then signed by DeSantis in December of last year, that addresses some of the primary vehicles that were really causing the root cause of these things. Now it'll take a year or two before that starts to hit the bottom lines of these insurance companies and incentivize them to, stabilize premiums or new companies to come in. But that has been changed, that those laws are now on the books, and hopefully we start to see, as we get more distant from the storm, those kinds of things putting positive pressure on the insurance market.
Great.
Great. Well, Frank, maybe you can tell us a little bit about what's going on in the housing market. Like I said, last time we got together, a lot of uncertainty. The hurricane was pretty fresh.
Yep.
What are you seeing here the last couple of months?
Obviously, sales have been down quite a bit from last year. We came off probably one of the greatest years in real estate 12 months ago. This time last year, put a house on the market, you collect your multiple offers, see which contingencies are going to get dropped first, and select the winner. And so that has completely changed, and so buyers are extremely hesitant to do anything at this point.
Right.
And so there's just no sense of urgency. Interest rates are a factor. We'll talk about that. Insurance costs is kind of the uncertainty there. And I think there's some question mark in some people's minds too. Is there going to be another storm this summer? And so if I'm in the buying seat, it's now April, middle of April. Do I just kind of hang out until end of August, end of September? I don't think prices are going to go up. I think they may go down. What we've seen so far is inventory started to creep up, but not significantly.
Right.
And prices are probably down maybe 5%, maybe 10% from the peak at this point.
Okay.
And kind of stabilized at that point. So we are going to see some motivated sellers over the next couple months as people that know they're not coming back or need to sell. Maybe they've settled their insurance claim and they're ready to go. They're not going to be down here next year. So we are going to see some buying opportunities, I think, over the next couple of months too. But I don't think we're going to see a big drastic price drop. Certainly nothing like 2008. I think still have 1,000 people a day moving to Florida.
Right.
And this is still an environment that people want to live in.
And inventory is always kind of the question, because if you have a lot of inventory, then that would be a concern. So what are you seeing as far as, you mentioned inventory is picking up a little bit, but where does that compare to say, maybe other past years?
Yeah, we kind of look at 2019 as the last normal year. And so that was before COVID. So we had 2 years of COVID, then we've got a year of the storm. And so inventory is still well below inventory levels in 2019. So if you go back to March of 2019, we're still significantly below where that number is. So while inventory is up quite a bit from last year, there was nothing on the market last year. So again, looking bigger picture, inventory levels are still really kind of an equilibrium market. We haven't shifted to a buyer's market at this point. It's still pretty equilibrium. There are some pockets, some of the higher end, Cape Coral over $1 million, we've got about 11 months of inventory. But if you look at 2019, we had 46 months of inventory back in 2019.
Yeah.
So last time I ran the stats, I actually pretty happy with what I saw.
Yeah.
So I thought, this is still a decent market. So
That's great. So I'm going to put you on the spot. If rates were to drop below 6%,
Yep.
do you think that would have a strong influence on the buyers coming out?
Not immediately, but I think longer term, yes. I think as we kind of get through the summer, so again, you go back to the frenzy a year ago, 6-7 people put multiple offers in on a house, only one of those people got the house. And so there's still 5 or 6 people, maybe one of those people don't want to move down here now because of the storm. Maybe they've gotten priced out because of the increase in prices. But there's still 3 or 4 people that still want to move to Florida. The rental rates are insane with what's happening in the market. So I think anytime that we can get into a little bit lower, I think 6 is probably going to be considered the new norm, whereas a year ago, 3 or 4. So I think that as that gets settled with people, I do think that will move some people into the market again.
Okay. Well, I was curious because I was going to share with you a little bit about what we're seeing as it relates to mortgage rates. And, for the last month or so, they've just been kind of bouncing right around that same territory.
Yep.
A little up, little down, little up, little down, not really doing much of anything. We're starting to see that inflation number come down, which is, remember that inflation is kryptonite to mortgage rates. So as we see inflation come down, mortgage rates should come down with them. I mean, right now we're seeing rates, in the low 6s, for a primary residence. The challenge that I see with our customers is that second home financing, last year changed where, for the longest time since I've been in the business, a second home rate was not really any different than a primary
Right,
home rate.
right.
Well, the agencies changed that. They treat them like investment properties. So now the rates are 1% or even more greater than a primary residence. So, a lot of our second home buyers who are financing, like, woo. I mean, the point of entry is really 25% down now if you want a rate that isn't outrageous.
Yeah.
So that's a little bit of the challenge that I don't see changing.
Yeah, and we, obviously, a lot of our buyers are second home buyers down here. We have a lot of snowbirds down here, and that's one of the draws for people down here. So, and I saw today, one of the news agencies came out and said second home purchases are down like 50% from last year. So that is having a big impact.
Definitely a contributing factor. But here's what we see, and that's why I asked you that question. We're looking at sometime here in the summer, if everything continues the way that it's going as far as, inflation starting to ease, we should see rates in the mid-5s or so.
Wow.
So if we see that and some of the things that you're kind of sharing, maybe there'll continue to be a little bit of an easing on prices, a little bit more inventory. Now you got good rates, a little bit better price, here come the buyers.
Right.
And we know that momentum can definitely drive a market.
Yep.
And we saw that early last year with just people going into a frenzy with their offers. Why? Because it was that momentum just building up one after the other. Well, momentum does tend to slow down, as we saw it, but we ready for our next wave of momentum. So hopefully we'll see that. But that's what we're seeing. So right now rates are gradually improving, nothing dramatic, but look to next month, some of the key economic data that comes out in May. If it's what it's expected to be, I think we'll start to see a sharp rise in a downward trend toward interest rates.
Great. Yeah.
Well, hey, it's been fun talking with you guys again. I really appreciate you taking the time and coming out and sharing a little bit about what's going on in the insurance market. And Frank, it's always good to have an expert tell us what's going on in the Southwest Florida housing market. Could you share your contact information with everyone?
Frank Ehrhardt, 239-896-3437, John R. Wood Properties, and our website is johnrwood.com.
And Jamin, could you share your contact info?
Yeah, again, I'm Jamin Eastman with Chapman Insurance Group. Our website is cigflorida.com, and you can email me at Jamin, Jamin, at cigflorida.com, or reach me on the phone at 239-307-0339.
Fantastic. And Nathan Davis here again, 239-898-8841. You can always catch me on my website Yeah, I'll get that right, agentslender.com. Guys, look forward to seeing you again soon.
Sounds great. Thanks,
Thank you
Nathan.
very much.
Thanks, guys. Appreciate it.